Good morning, everyone, and welcome back to our 12th episode of Equity Explorer. I'm Karina, a global equity investment specialist at Fairtree, and I'll be moderating today's discussion with our analyst, Ashen. So just to give you guys some insights on Equity Explorer, it was designed as a teach-in on key themes on equity markets, ultimately offering deeper insights into industries, companies, and trends that are shaping global investments. So our goal here is to give you tools to better understand the forces driving markets and to highlight potential opportunities. However, please do note that this is not financial advice, nor does it represent a deep dive into our portfolios. With that, I'm really excited to introduce today's discussion, where we'll actually be focusing on the equipment companies that are ultimately enabling chip production. We'll be focusing on Applied Materials, KLA, Lam, and ASML. So whilst we are talking, please feel free to send through any questions, and we'll try to answer as many of those as possible after the presentation. With that, I'd like to introduce Ash. He'll be taking us through today's deep dive. Over to you, Ash.
Thank you, Karina, and good morning and welcome to everyone on the call. Thank you for joining. As Karina said, I'll take you through the equipment industry, the semiconductor equipment industry, and the bigger developed market players in that space. Okay, if we just start with a little bit of background, I think, let me just grab my pointer. Okay, so firstly, you've got the equipment names, and I've got them at the bottom of this image, Applied Materials, KLA, Lam, and ASML, who really form the foundation of the industry. And you can think of them as the picks and shovels of the semiconductor industry. So if I take you through this diagram, you first look at your IP or EDA names, and EDA stands for Electronic Design and Automation Software. And these are companies like Cadence or Synopsys, which you may have heard of. And what they do is they provide software which allows companies to design chips. And this you can think of as very complicated architectural or CAD software, which you require to design very complex chips. Then what happens is a company like NVIDIA or Qualcomm, who are referred to as fabless companies or capital light companies because they don't manufacture their own chips. They will design these chips using the software from a Cadence or a Synopsys. And once they've designed their chips, they'll send that off to a foundry or a fabrication plant, a company like TSMC or SMIC in China. And these companies will purchase all the raw materials required to manufacture that chip, as well as all the equipment that they require from your equipment supply chain. What then happens is a company like TSMC would manufacture these chips on large wafers, and wafer is, as the name suggests, it's a large plate of wafers. You could think of it that way, between 8 and 12 inches in diameter. And on a particular wafer, you've got hundreds or even thousands of individual chips. And these raw wafers, with the chip design on it, will be sent to assembly and test companies. So that's a smaller part of the supply chain, which we won't go into too much of detail on today, predominantly dominated by Asian companies. And these companies would then take those raw wafers and slice up the individual chips on that wafer and then package it in an iPhone, for example. And then lastly, on the top, I haven't talked about integrated design manufacturers or IDMs. And this is a company like Intel, who both designs, manufactures, and packages its own chips. So what we've seen in the last sort of 2 decades is more and more companies have moved towards an outsourcing model like NVIDIA or Qualcomm or an AMD or Broadcom, for that matter, where they choose not to manufacture their own chips because as chips become more advanced, the cost and complexity of manufacturing those chips has increased significantly. So it makes financial sense to allow a company like TSMC to manufacture these chips at scale at more competitive cost. Just to give a quick background of these companies, I think the important takeaway is that this is a oligopolistic industry in nature, where you see a handful of companies dominating market share. So for sort of context, these 4 companies, including a Japanese company called Tokyo Electron, accounts for about 70% of revenue market share for the industry. So very concentrated, very specialized. And then I also say that it's a cyclical growth industry. And I think why I want to emphasize this is because we've seen, if you look at the revenue CAGR, so I've just taken the revenue CAGR for each of these companies over the last 7 years, and you can see very healthy revenue growth. And then if you look at profit growth, be it operating profit or net profit growth, also very healthy, obviously achieving economies of scale, operating leverage, which has allowed them to increase profitability more than revenue. You also see very strong free cash flow conversion for these companies. They're not very capital intensive because the equipment that they require to manufacture their machines are not very expensive, and they're able to do this very efficiently. And then if you look at the current return on equity for each of these companies, all very high. These companies do buy back shares quite aggressively, and generally are not very acquisitive. And then looking at the balance sheets of these companies, all very healthy balance sheets with 3 of the 4 companies in a net cash position. I'll talk through the cyclicality a bit later on, but just for some background, these are what we refer to as cyclical growth companies. Before I go into the detail and the technicalities around chip manufacturing, I just want to paint the picture and provide an analogy which I think helps to understand the more complex matters of the supply chain. So what I've got here is I generated this on ChatGPT, but on the left here, the analogy that I want to bring to the picture is, imagine trying to build a skyscraper where each of these individual floors are only an atom thick. And if you've got a single speck of dust which lands on the construction site, the entire construction site is rendered useless and effectively collapses. And we see that with clean rooms and TSMC, for example. We know that they're very specialized facilities with, where they don't even allow a speck of dust to enter because that can ruin entire batches of wafers. So this is very complex. You're building very small chips, and it's a very costly process. On the right, I've got a picture. So it's a very highly zoomed in picture of something called high bandwidth memory. So this is an AI type of memory, which you might have heard of. It's been very topical for the likes of Samsung and Micron and SK Hynix lately. And here is an example of HBM3, where you've got 16 different layers stacked on top of each other. So just to give some context, in real life terms, the thickness of this entire chip, which I show you on the right, is less than 1 millimeter thick. So you can imagine the complexity associated with manufacturing this entire chip and all of the individual layers that go into manufacturing. Okay, yeah, I want to try and talk through the different parts of the manufacturing process. So there are various different, very distinct parts of the manufacturing process where you need distinct equipment for. So if I just start off on the left with a raw wafer. So this is like the gray circle that you see. So this is what you could think of as the foundation of a small city. And silicon, it's made of silicon, which is effectively quartz sand heated at more than 2000 degrees Celsius to try to remove the oxygen. You then move on to the deposition stage. You can see the blue layer, which is added. So deposition is, the way you can think of it, is a concrete floor being added across the entire city block. Then you move on to the first part of photoresist, which is the white layer, which you see. And photoresist is effectively a primer, a light-sensitive chemical, which is applied. And you can think of this as a smoothing cement onto the concrete before you start tiling. You then move on to lithography, which you probably have heard of with ASML dominating in the space. And lithography is where you see the black part of the image, the black stencils. These stencils contain the design of the chips which are being manufactured. So you shine very intense light sources through the stencil in order to carve out the particular chip design that you're trying to design. Then there's a second layer of photoresist where you can see you remove a portion of the white photoresist material. And you can think of this as developing a photograph. So the chip design is slowly but surely coming to fruition. Then you've got the doping part of the process, and doping is, you can think of it as adding spice to a meal, for example, where what you're doing is these arrows that you see here, you're shooting ions onto the surface. And what you then do is you're able to change the electrical conductivity of that surface material so that you can effectively choose where electrical circuit will conduct on that particular design. And this gives the chip the characteristic of being a semiconductor where you're able to conduct electricity in certain parts to achieve the required outcome. Then you've got etching and cleaning. And what you do in this part of the process is effectively you're cleaning away the excess material. So in part of the process, you use highly specialized chemicals, and then you're just removing any leftover material and scrubbing away any leftover photoresist which remains on the chip. And then, while this entire process is going on, you've got something called process control. So I've starred all of those important parts of the manufacturing process. And process control is really just quality control, if you think about it. And what you're able to do is at every part of the manufacturing process, you're able to check that the semiconductor is being manufactured correctly, that there aren't impurities, that it's functioning as required, because as you can imagine, this entire process is extremely costly, and the cost of messing up one of the parts of the process is very high because you'd have to scrap the entire wafer or entire batch of wafers. So this does look quite complex, but I'll break it down a bit more and give some more context on the particular companies. But this is just one iteration of the design process, and then it's repeated hundreds or even thousands of times to come up with a particular chip you want and the various layers that you require. Okay. For some more context on why this equipment process is very complicated and why you need very specialized equipment is because of, if you see look at the graph on the left here, I've got manufacturing process steps. So the y-axis is the number of individual process steps that are carried out. And if you start with 90 nanometer nodes, so those are legacy semiconductors, particularly used in some of your early PCs in the early 2000s, or for the gamers, you'd remember the PlayStation 2, which used 90 nanometer chips, so more legacy technology. And at that particular stage, there were 400 individual manufacturing steps. As semiconductors have advanced and the technology has advanced with that, to 5 nanometer, which for context is a chip used in an iPhone 14. The number of individual steps to process and manufacture that semiconductor has increased to north of 1,000 steps. And more recently, we're expecting a 2 nanometer chip to be used in the iPhone 18 being released in September. And with that, you'll see even more complexity and in more manufacturing steps added to this process. So for some context as well, I think, we often think about an iPhone and how it would probably be assembled within a number of days. But before that, we need to manufacture the chip. And the entire manufacturing process can take between 90 and 120 days just to manufacture one batch of iPhone chips. So this is a very complex process. It takes a long time to get these chips right. And the complexity continues to increase, and therefore it's very important to have the specialized equipment that you require. And companies like TSMC are willing to pay up for high quality equipment from suppliers they can trust, where they've got aftermarket service, and this is very important to them. If I just give some more context on, as I've mentioned, all those different parts of the manufacturing process, and I've talked about deposition and etch and lithography and process control, for example, but there really are those four different parts of the manufacturing process, which I highlighted earlier, which account for more than 70% of total revenue earned in this particular industry. So it's important to really focus on those four parts of the manufacturing process. And then to give some more color on a company level. So this image here, well, what it shows is the previous image I showed the share of wafer fabrication equipment or equipment revenue. We know that deposition, lithography, etch and clean and process control are the biggest parts of the manufacturing process. But the key takeaway here is if you look at ASML, for example, they and KLA are the only two players that operate in one particular part of the manufacturing process. So lithography is where ASML operates. They are the most dominant player, and I'll talk to ASML in more detail later on. And then you've got KLA, which are very dominant in the process control market. And then you've got applied materials, which is a bit more diversified and operates in various parts of the manufacturing process. Then you've got Lam, which is less diversified than ASML or less diversified than applied materials that operate in deposition and etch and clean. Here I've got market share for all 5 companies which I've talked about, and including Tokyo Electron. And this is market share split. The graph on the left is memory market share, so equipment sold to manufacturers of memory. So those would be the big manufacturers of memory that we know is Samsung, SK Hynix, Micron. And then on the right is just all equipment sold outside of equipment sold to memory. So equipment revenue less memory. The reason you split it out is because memory is more cyclical than the rest of the semiconductor industry, and there are different nuances with regard to tech adoption for memory versus the rest of the industry. So, I mean, there's a few observations here. You can see ASML's market share in memory increased very significantly from the beginning of 2022, and this was when memory companies adopted EUV technology, their latest EUV machines in manufacturing memory. And then you also saw applied materials benefit from that as well. Then you saw a nuance with Lam, for example, losing share at the same time, and that is because Lam operates in a different part of the memory market called NAND or storage memory, which had been oversupplied at that stage. And then you saw a sort of decline in capex and therefore a decline in memory share. But the point that I want to make here is you can see that market share can be quite volatile between all of these different players. And that's because there are various nuances that you need to consider. So first of all, you need to consider where we are in the memory cycle. What's happening with capex in memory, for example? Is it increasing? Is it decreasing? And that could be different to the capex cycle that we're seeing beyond memory, the capex cycle that we're seeing at TSMC, for example, because TSMC don't manufacture memory. Then there are also various different tech transitions which we need to be cognizant of, and we spend a lot of time trying to understand and get ahead of. As I mentioned in the example with ASML, with memory, when memory names started adopting their latest technology, we saw an inflection there as well. So market share can be quite volatile, but the tech transitions are more important to keep in mind. Then I've talked about the cyclicality earlier on, but just to put this in context and give some longer term history. Here, what we've got, the orange line is global equipment revenue growth, and the black line is total global semiconductor revenue growth. And you can see that the equipment industry is a lot more cyclical than broader semiconductor revenue industry or the semiconductor industry more broadly. And this makes a lot of sense. I mean, if you think about a company like TSMC, which represents a very large part of global semiconductor revenue, when demand is very high and they're seeing strong demand signals and they're cash flush, they would invest more aggressively on capex, which would come through in equipment revenue. Then there's a period of time where they would digest all the new capacity which they've brought online, and then there'd be a decline in demand as prices start to increase, and there'd be some demand destruction. So naturally, the equipment industry has always been cyclical and will most likely continue to be cyclical going forward. So it's important to keep in mind. Yeah, what we've got is a similar picture to the graph that I showed previously, but this is just global equipment revenue in the orange bars. And then in the black line, we've got effectively capital intensity, so equipment revenue as a percentage of total global semiconductor revenue. And what you see here is, it's a high growth industry, as I showed, and as I alluded to when I talked about the individual companies. But what you see is sort of post 2020, you saw an increase in capital intensity, and there were a few drivers behind this. Of course, there was a shortage of semiconductors after the COVID pandemic, when demand for electronics, rose very, very, very quickly, and supply wasn't able to keep track. And then on top of that, we had some technology shifts. So we had the advent of EUV technology, which was sold by ASML from late 2019. And then we've continued to see advancements in technology and chips and more generally, which just requires more equipment, more specialized equipment, more expensive equipment. And there's been a structural increase in the capital intensity of the industry as a whole. Okay, looking at end markets, I think the important part that we just want to highlight here is, if you have a look at, so this is global equipment revenue by end market. And what I mean by end market is that equipment, which industry is it sold into? Is it sold into the foundry industry? So those are the fabs like TSMC and SMIC in China, which are just dedicated factories for companies that outsource their manufacturing. Then you've got logic, which refers to companies like Intel, those integrated design manufacturers that I talked about in the beginning, and then DRAM and NAND, that two types of memory, and then wafer level package equipment is the assembly and test companies, which I also talked to a bit earlier. But the important point that I want to make here is, you can see the orange bar, the share of the orange bar increasing quite significantly from 2019 to almost 50% currently. And that predominantly is driven by TSMC's continued dominance. So they've continued to increase their market share as the likes of Samsung Foundry and Intel have struggled with their technology. And TSMC remains the most dominant manufacturer of leading edge chips. So in terms of leading edge chips, sort of, which you can think of as chips which go into your most advanced electronics and data centers, smartphones, PCs, TSMC has more than 90% share. So the important takeaway from this graph is TSMC has become increasingly more important for this industry in general. So understanding and taking a view on where TSMC are in their capex cycle is increasingly more important. In what I've done here in this graph, I've just tried to split out exposure by end market for all of these companies. So logic, foundry and logic, which you can think of as compute chips, that's all chips excluding memory chips, and then memory chips. So this is just revenue exposure by these different end markets. And the point being, you can see exposures generally, if you look at compute chips shown on the left, is generally very similar for all the companies besides Lam. So Lam, if you look at Lam on the graph on the right, you can see that on a normalized basis, the exposure to the memory market is, circa 50%. And the reason being that the memory market and the storage NAND market in particular has used a lot more etch and deposition technology, because they went through a structural change in the way the technology was manufactured. So NAND chips were the first category of chips to stack chips on top of each other to increase the density of memory within a particular memory chip. So there are nuances behind that, but the idea is, when you're now starting to, when you're trying to undertake a view on these particular stocks, you also need to understand the exposure to different end market and how that technology inflection will play out going forward. Yeah, I just want to highlight that these companies don't just sell equipment. So bulk of the business is equipment sales, but there's also the services business. So services are maintenance and upgrades. As you can imagine, these machines are incredibly complex. They're very large. So you need specialized maintenance and upgrade services and repair services from the OEM themselves. So for most of these companies, or barring Lam, which is an exception, services is about a quarter of the revenue base. And why this is important, as I'll show next, is this part of the business is less cyclical. And going forward, we should expect that services will increase in the mix naturally, given that the installed base of equipment continues to increase and increase quite aggressively. And then I just want to point out also that Lam is somewhat of an exception here because the way they disclose their services revenue, or the definition is slightly different in that they also sell refurbished equipment. So it's not pure services in the same way that's defined by the peers. And then, what I talked about a little bit earlier on, so you can see this is just revenue growth for the equipment part of the business and the services part of the business for all four of these peers. And you can see with Applied Materials and KLA, the black line, which represents services growth, is a lot less cyclical, a more reliable source of growth. With Lam, of course, as I mentioned, they've got this repair business or refurbished equipment business, which skews that picture somewhat. And then ASML on a normalized basis would also be less cyclical in their services business, but there were a few nuances. For example, in 2023, they were subject to export controls relating to some of the servicing business in China, so that accounted for the big drop in growth in services. And as I mentioned, China, I think it's a very important and topical part of understanding the equipment space and where we're heading. So for some context here, what I've done is I've tried to highlight all of the material developments in the space, in the geopolitical space, in the last, 5 or 7 years. The point I want to make is that export controls imposed by the US isn't something new. Started in 2018. So I've colored in red, I think, what I think are some of the more material developments. So in 2018, firstly, the US imposed an Export Control Reform Act, which gave the Department of Commerce more broader powers to tighten export controls. And export controls really just refer to the export of US semiconductor equipment into China. But a very material development happened in 2019 at the same time that ASML was ready to start shipping their first EUV tools, where the Dutch government blocked ASML from shipping any EUV tools into China. So China were never able to access these more advanced or the most advanced lithography chips manufactured by ASML. Then in 2022, there's just a broadening of these rules. You had, in particular, the US in particular targeting specific equipment. So the US imposed export restrictions on the most advanced equipment. So they have various definitions, and it can get quite technical in terms of the definitions. But the way you can think of it more broadly is, your more advanced chips, which go into your latest data centers and the smartphones, PCs, were restricted, or the equipment associated with that was restricted from being sold into China. Then in 2022, I also want to highlight the foreign direct product rule, which was enforced by the US. And what this was it allows the US government to force governments of other countries to impose export restrictions where US IP is being used in that equipment. So, for example, ASML's EUV technology is developed partly by IP from a US company, which ASML purchased many years ago. But because that is still US IP, the US government was able to force ASML to increase their export restrictions on certain equipment, with the threat of not allowing them to use that IP going forward. And then in 2023, 24, there's just more lobbying. We saw for the first time, more broader lobbying of Dutch and Japanese governments to impose similar export restrictions to the US. And then in 2025, slight broadening again. The one big change was the US affiliates rule, which imposed export restrictions on Chinese companies controlled by government. And as we've talked about China, I think, with all the export restriction noise that we've heard in the headlines, it's important to note that equipment spend in China, so predominantly coming from these multinational companies which are presented on today, has grown materially over the last few years. So you can see from sort of 2022 to 2025 in particular, there's been very strong growth. So China accounts for north of 40% of global equipment revenue currently. And then, just to highlight that point, what I've got you on the left is effectively the same graph, but what you've got here is Chinese equipment revenue or Chinese equipment demand, you could think of it that way. That's coming from your global suppliers in the gray bars, and then coming from Chinese domestic suppliers in the blue bars. So what you can see is that the domestic part of the market, the blue bars, are still very small relative to um, the multinational suppliers. So China's self-sufficiency is circa 25% currently. But within that, there are various nuances to consider. So firstly, if you look at the sort of image on the right, if you look at lithography and process control, so ASML and KLA, you can see China's self-sufficiency is less than 5% in those areas of the manufacturing process. When you look at deposition and dry etch, where Lam is quite dominant, for example, you can see that China has caught up more so than other parts of the manufacturing process. But more generally and more broadly, China still remains 2 or 3 years behind the US, more broadly in terms of the equipment that they can provide domestically or from domestic suppliers. Yeah, we've got the forward price to earnings multiples for each of these companies, and what you can see here is these companies continue to trade at very elevated multiples, historic peak multiples, um, which suggest the market is pricing in sustained growth for a number of years. And then this is, quite interesting and some food for thought. If you look at the orange line, that represents the semiconductor equipment index or industry more broadly. And what I've also got there is the forward price to earnings multiple of NVIDIA in the black line and TSMC in the green line. And you can see that these equipment companies trade at a 50% premium to NVIDIA and TSMC. So NVIDIA are obviously one of the largest AI companies, and they're creating a lot of the demand for equipment. If you think about, their demand would translate into requirements for additional capacity, and the capacity is equipped from these equipment names. And then, TSMC, they are the buyers of equipment as well. So this multiple or this divergence in multiples is very extreme. What I've got here is I just want to highlight, some of the historical financials. I've given a summary earlier on. I'll skip through them quite quickly, but very similar picture for all of these names. Very strong revenue growth, strong profit margin growth as these businesses have scaled very nicely, and also very strong earnings per share and free cash flow growth. For Lam Research, a very similar picture we see there. Lam Research, there's also one nuance which I want to point out. So what I've got here is the equipment revenue which comes from the NAND industry. And you can see how depressed these orange bars are relative to where they were in 2021, for instance. And on the right is just that mix of how much of group revenue does NAND represent, for example. You can see it's currently about 7% of group revenue. And there is a consideration of when NAND equipment spending is going to start to increase more meaningfully again, and this gives them a potential nice leg of growth off a very depressed base. There are some nuances that we consider very closely. For example, we know some of the Chinese players, a company called YMTC, has developed very impressive NAND technology, and they're becoming an increasing threat to the NAND space more broadly. Then we've got KLA in a very similar picture, grown off a very low base, but we've seen some nice operating leverage and very healthy free cash flow and EPS growth as well. On ASML, I just want to, I think they've got a very interesting history and their technology is very impressive. Remember that they've got a monopoly in this EUV technology. So I just want to give a quick recap on what EUV means and how important it is. So what I've got on the left there is a depiction of an EUV machine, and there's a man standing next to it to give some scope of the scale. So these lithography machines are effectively big laser machines, incredibly sophisticated. They are sometimes the size of these machines are equivalent to multiple buses next to each other. I've saw an interesting comment that often takes multiple different planes to transport this machinery because you need to break it down into different components, put it on a plane, and then fly to predominantly to Taiwan to TSMC. So to put this in context, so I've got a picture of a moon here, and the reason being that if you want to put EUV technology in context, you can think of shining a laser from wherever you are at onto the moon and hitting a golf ball with complete accuracy. So this is, very impressive technology and allows equipment companies or manufacturers to print very intricate designs and design smaller and smaller chips so that you can fit more and more chips onto your design. And why EUV is also more important is it reduces the cost of the lithography process by up to half versus more legacy technology. It shortens your process cycle time by 3 to 6 times on average. Your risks of defects are lower, and your overall cost of production declines between 15 and 30%. ASML's history is also worth recapping quickly because they've got a very unique story. So they were founded in 1984 as a JV between two big Dutch companies, Philips and ASM International. In the 2000s, they really developed EUV or lithography technology more broadly. Then in 2010, they started looking at EUV technology. So it was a whole new category of technology which had never been developed before. It was very theoretical at that stage. And they didn't have the capital to fund the R&D that they required to develop this EUV or extreme ultraviolet lithography technology. So they approached their largest companies, and at the time, the largest companies were Intel, TSMC, and Samsung, and asked them for some assistance. So in total, these companies provided about 1.5 billion euros of R&D funding to develop EU technology, and in exchange, these companies received equity stakes. So this really allowed ASML to innovate and really take the entire sector and move the world forward with much more advanced technology. And then they continued to innovate in the 2000s, starting to ship these EUV machines at more scale. And then 2023 launched the high NA EUV machine, which is just a more advanced version of the incumbent EUV machine, which allows you to print smaller and smaller chips and uses much more advanced technology. And then, they continue to innovate, and there's a roadmap to 2030 of continuing to improve this technology. That is ASML's group financials for context in the same way I show the peers. What you will notice is, the free cash flow had been slightly weak in 2023, for example. That was just due to a working capital build as they geared up for launch of new equipment, and they also funded some of their suppliers to help build a resilient supply chain. So nothing that we're really concerned about, but very very healthy and healthy growth and fundamentals more broadly. Then with ASML, I mean, obviously the more important or more topical discussion will be around equipment sales in the EUV space in particular. So this orange bar, so this is just group revenue dissected by DUV, which is deep ultraviolet lithography, which is more legacy technology than EUV technology. But you can see that, it's increased very nicely in the mix. So, increased to about 40% of the mix. And then as they start to roll out, more advanced EUV technology, that will continue to increase in the mix and will be supportive of margin growth over the medium term. Thank you. That's it for me. I'm happy to take any questions. Karina, I don't know if you want to direct that.
Brilliant. Thank you so much, Ash. That was great. Maybe we'll kick off with a few questions that we've gotten. First one, how are geopolitical tensions and onshoring affecting the industry?
Sure. So I think, that's obviously very important to understand and keep abreast of. Um, what we've seen is, as I've showed before, the export controls and geopolitical tensions with regard to the semiconductor equipment industry have broadened somewhat. But what we've also seen under the Trump administration more recently is the US allowing the likes of AMD and NVIDIA to start shipping some legacy data center AI chips into China. There's also a lot of talk of NVIDIA being allowed to ship their H200 chips, which is effectively one generation behind the current incumbent Blackwell range. So, those are still very powerful chips, which in all likelihood will be allowed to be shipped to China in, smaller volumes. Um, so we think that the US administration is understanding that very draconian export controls will allow and force China to develop their own technology. So, we all know the saying that, restriction or something along the lines of uh, the mother of necessity is restriction or something along those lines. So we've seen um, the US government understand that more broadly, and we don't think that there's high risk of much more draconian export controls versus what's currently in place.
Brilliant, thank you. And then maybe one more topical question that's probably in the market at the moment. Is the AI boom a bubble or a permanent giga cycle for equipment sales?
Sure. So I think just, when we think about historical cycles, I think what we need to remember is when we look at semiconductors more broadly, historical cycles were driven by demand for a single type of device. So if we go back to the dot-com bubble, very strong demand for PCs in particular. And what we see with AI now, it's a lot broader. So there's demand from both enterprise as well as consumer markets. And then this AI is also used on multiple devices. We use AI applications on our PCs, on our smartphones, and some smartwatches, and all the rest. And the idea, it's a much more broader, potentially a much more broader cycle. But I think one thing that we're quite confident is that with all other cycles that we've seen in the past, there does come a time where there is excess capacity and demand is not keeping up with the capacity as is. So we will get a point at which growth will either slow materially or we'll start to see a decline in demand. But I think the big unknown and what makes this particular cycle very difficult to have a high conviction call on is the rate of development of technology has been very, very aggressive. If we just think about the DeepSeek moment in China last year, where DeepSeek used a method or a technology called method of experts to effectively reduce the cost of inferencing very significantly. That's just one example of cost coming down very, very aggressively. So there's a lot of technological events which we need to think about very closely. But if we just look at the valuations that the semiconductor companies, if you move outside of the equipment names, the likes of NVIDIA is a great example. You look at the valuations it's trading on, the growth that they're guiding for, the returns, the free cash flow, the fundamentals still look very good. So we don't think some of those larger companies are in bubble territory because the valuations are attractive and fundamentals are still very strong.
Brilliant, thank you. And then maybe one just a bit more in depth on the sort of equipment names. Why is everyone talking about 2 nanometer technology right now?
Okay, so maybe just for some context, nanometers refer to effectively the generation of technology without getting too technical. So the lower the number, the more advanced the technology is. So for context, 2 nanometer chips will be in your new iPhone 18, which will release in September this year. So why 2 nanometers is quite important is there's an architecture change to the way these semiconductors are manufactured. So we're moving to a new technology which is called gate all around. I won't go into all the technicalities of it, but this effectively changes the way that these chips are manufactured and the structure and the architecture of that particular chip. So we now will use more etch and deposition tools, for example, in this 2 nanometer architecture. So there is, some For example, there's some concern that EUV intensity would decrease slightly as you move to 2 nanometer technology, given the architecture, but then your deposition and etch would increase at the same time. But it is a very exciting technology, and then just pushes the boundaries of innovation even further.
Brilliant. Thank you, Ash. I think we'll call the questions there. If there's any questions we haven't answered, we'll get back to you via email. But yeah, a big thank you to you and thank you to the audience for the engagement. And we're looking forward to seeing you at our next session next month. Thank you so much, everyone.
Thank you, everyone. Have a good morning.
Thanks, Ash.